Hey everybody, it's Jeremy Whaley here from Trade Maestro, and if you've been paying attention, the Dow Jones is up about 3,000 points in the last 2 weeks, which is a pretty sizable move. So of course people are starting to ask, is it safe? Can we start buying again? Should we close out any bearish trades? Well, I'm going to have those answers and more in this market update for October 26, 2022. Let's go. Hello everybody. It's Jeremy Whaley here from Trade Maestro over at trademaestro.com. I hope you guys are doing fantastic today. Hope you've had a great week. If you're watching this today, I release it. It is Wednesday, October 26, 2022. So, sometimes people come back and watch these 3 or 4 weeks later. You may be wondering, when was this thing? Well, that's today. All right. Hope you guys are doing great. We've had an exciting week, and I've got some pretty good updates to share with you and some pretty what I think is pretty insightful analysis to add to the mix here, and maybe it'll give us some clarity as to what to expect through the rest of the month. Even though it's been a little bit of a surprise, we didn't exactly expect things to play out exactly this way. I think there is an explanation for it, and I'm looking forward to sharing that with you here. Before we do that, I have a couple of announcements. Many of you have been joining me this week. For the first 2 days of the week, we've been doing our Bear Market Survivor 3-day challenge, and I appreciate it. It's been fun being with you. If you have not joined us for that, you really should. You should go back and watch the videos. They're posted on the YouTube channel, or also posted on our website over at trademaestro.com. So watch day number 1, day number 2, and depending on when you're seeing this, day number 3 is actually today at 11 o'clock Central Time, noon Eastern Time. So you can still see the live stream if you're seeing this first thing in the morning. If you're seeing this later in the day, then, watch the recording for it. But it's a 3-day challenge. I think it's really good. I think you guys are going to get a lot of really great information about how to prepare for and survive in this bear market. Okay, so that's the first thing. Second announcement I have for you. Today is our last day for the Market Maestro Accelerator super exclusive early bird pricing. So that's expiring tonight at midnight. Some of you have been sitting on the fence thinking about, did you want to do this or not? Some of you don't even know about it. You hadn't seen the announcements or anything. So I'll put the links below, and you can click on those, go check it out yourself. I'm not doing this video to give you a big sales pitch or anything. I just want you to know and be aware today's the last day for the super exclusive early bird pricing. There will be discounts tomorrow, but they will not be as good as the discounts today. So if you've been thinking about doing that, then hey, it's time. Go take action on that right now, because that is going to be expiring momentarily here. Momentarily being at the end of the day today. All right, let's get over here to the market and see what's going on as we do some market updates here. You should be seeing my chart here for the Dow Jones Industrial Average, along with all of my lines. As I alluded to in the beginning, we are closing the day, closing Tuesday's trading session. Let me fix my pen here because I had to restart my computer and my pen did not come back with it here. So my apologies. Rather than redo our recording, I'll just, I think I'm going to move it over here. There we go. All right, there it is. Now can we draw now? Nope, still can't draw. Well, that's awkward, but you know what? I don't want to edit the video a whole lot, so you're just going to hang with me here. There we go. Maybe that's working now. There we go. As you're looking at this here, we closed Tuesday, about 31,836 is the number. 31,836. If you go back to just about a couple of weeks ago, change our pen color here so it's a little brighter. We opened that day around 28,800. So that's about 3,000 points in just a couple of weeks. That's about 10%. So, it's not a small number. But when you look at the trend, you can see my baby blue trend line here. We talked about this in Sunday's update, that was kind of my target. And we hit that as of today, as of Tuesday. So we're really there. I'm going to get rid of these lines so that I can keep this a little bit cleaner and just redraw some of these here, because I want to draw your attention very clear to it. This line that I had drawn through here, right there, we are sitting right on that. And what I want to draw your attention to, I'm even going to get rid of all these averages so we can really clean this up and draw your attention to what I think is the most important thing here. If you look at this, you're going to notice, I'll change the pen color so we can see what I'm drawing. We have what we call a descending channel. Okay, you see that? So the yellow lines are representing the channeling behavior. The blue line is representing the price action. And you can see that the price action has pretty much stayed within the channel. We had one outlier here in August where we just pushed just a little bit above the upper side of that channel. That's not a problem. That happens. It's not a problem. The reason that this is an important piece of analysis to throw in here is it explains a lot of stuff. Now, I've been talking about this channel. I've actually compared it to the channel that we had in 2008. Into the 2008 crash, we had a channel just like this. It went from October 2007 all the way up to about August, September of 2008. This channel has moved a similar time frame. It's gone from January of 2022. Here we are, we're sitting at the end of October 2022. In terms of the numbers of iterations, this one has one extra iteration, but that's really irrelevant. That doesn't matter. That doesn't make it anything. It just is. What's kind of important here is to recognize that you have this descending lower highs, lower lows channel. That is by definition a bear trend. On every way you can define it, that is a bearish trend. But what is confusing about it is it behaves more like a distribution or an accumulation period where you're constantly up and you're constantly down. And that's what we're seeing as it's playing out here. Now, we thought in September and October, we thought the bottom was finally going to fall out and that this thing would really get moving to our next lower lows, which was going to be around 26,000 on the Dow. Obviously, it didn't happen. Instead, it has stayed within the channel. What I want to do right now is I want to draw your attention to the tools that we use inside of a channel. Now, before I go there, I want to just kind of teach you briefly. There's three phases or three types of movements that you can have in the market. That is up, down, and sideways. A trade, any stock can go up, it can go down, it can go sideways, and at any given time, it's doing one of those three motions. In fact, it's also doing a compound version of that in what we call fractals, but that's irrelevant at this point. So you're constantly have up, down, and sideways motions in the market. When we're going up, that's a bullish trend. It's really easy to identify that trend. A bullish trend is as easy as you can identify. It's just a simple bullish trend, and the tool we use for that is a moving average. Moving average is going to give you great signals almost every time with a bullish trend. A bearish trend, same thing. If market's moving down, it's a bearish trend. Moving averages are going to give you great signals. The problem with moving averages is they are not very reliable in a sideways move. They're not reliable in a sideways move. A channel, a channeling pattern, which is what you're seeing here in the Dow right now, is technically a sideways move. This is a downward channel, so it's making lower lows and lower highs, which is a bearish trend, but it's doing it in the pattern of a sideways move. So if you're in a sideways move, the moving averages will not be a good tool to tell you when to get in and when to get out. You say, well, what tool can I use? And the answer is we use an oscillator. I use the stochastics oscillator. Different people use different oscillators. I use the stochastics. Let me show you what that looks like. It's down here on the bottom, and it's this little squiggly line that you see down here. And it looks, in some ways, it kind of resembles the moving averages or the moving average cross as it goes up and down, and it crosses itself. So I'm going to draw your attention with a different pen color. Let's try red, if I can get that one clicked. And just notice up here at the top where I just circled, and if we come straight down, you're going to notice that our stochastics mirrored that, and it said to go down. It's telling you basically get out of this trade. That's one of the ways we use our stochastics. It's really good at the end of a trend, tells you to get out of the trade. Okay, now I'm going to draw your attention to a couple of other things. At the end of January, what did it say? It said we're going back up. You see that? Then we get into middle of February, and our stochastics tell us we're going down. We get into the beginning of March, our stochastics tells us we're going back up. We get into the beginning of April, our Stokes are telling us we're going down. We get into the middle of May, we're back up. You can see in June, it says down. Into June, it says up. In the middle of August, it told us to go down. And right now, what do we get? We're getting bullish signals telling us to go up. And look at where we are on the oscillator range. We are right back at overbought. which is telling us as soon as this rolls over, as soon as it crosses back down, you should start to see the price action of, in this case, the Dow, also heading down. Okay? Now, you might be looking at that and thinking that's an absolutely perfect indicator. And in this context only, it is a perfect indicator. It's a phenomenal indicator. The settings that I use for the stochastics in this environment work extraordinarily well. Okay, so you just need to know that in this context, this type of a market condition, this is an extraordinary indicator. It works really, really well. That's the signal that I see happening right now. Therefore, I'm still continuing my bearish outlook. I think intermediate to long term, we're still bearish in the market. Short term here, just like I said Sunday night in that market update, short term, we've had a little bit of bullish action. It could go higher. We could go on up to maybe 32,000, even up into the 33,000 range. But until we start putting in higher highs and higher lows, I am not reversing my forecast on this. I'm still very bearish on the market. So what I'm trying to draw your attention to here, the forecast isn't changing, but what we are going to kind of start shifting here until we get definite signals that this channel is no longer in play. I'm going to start relying more heavily on this stochastics indicator because it really is the most accurate tool in this environment. Now, again, if it's a regular bullish trend or a regular bearish trend, the moving averages are a better tool for us. And also in those environments, in an extended bullish trend or extended bearish trend, your stochastics actually isn't very good. So let me show you what that would look like just so you have a reference for it. I'm going to erase all this stuff here, erase all this, and I'm going to go back in time. And I'll show you, if you look through some of these bullish trends here, look at this little extended motion of the trend right here. And you notice how your stochastics actually got overbought and it stayed here for quite a while. And these sell signals were not good because in the middle of a trend, your stochastics really is not a very good tool. If we go back a little bit further here, you're going to notice that at the very beginning of this trend, your stochastics was already overbought. Now, so if you were basing your buy signals on your stochastics, you would have been completely off because it was telling you to sell when the market was going higher. That's actually the signal you're going to get in a trend, okay? In a channel, in a sideways move, you get great signals. In a trend, you do not get great signals with your stochastic. So what I always tell people is you have to know the right tool at the right time. Imagine you're building a house. Sometimes a good old-fashioned hammer is the best tool you can have when you're building a house. Sometimes you don't need a good old-fashioned hammer. Sometimes you need a drill. Sometimes you need something else. Maybe you need a saw. And, just to that extent, sometimes a good old-fashioned handsaw is the perfect tool, and sometimes you need an electric saw or power saw because it's going to do the job a lot faster. So it's really important whenever you're doing something that you use the right tool at the right time. And here, when we're looking at the market, it's really important that we use the right analytical tools, in this case, the right indicators, at the right time. Your moving averages are going to be great in the trend, and I'll put those back on here so you can really see that. Because I'm, not only trying to give you a forecast, but also trying to teach you how to interpret market data. So you can see here, we were getting bullish buy signals on your moving averages right at the beginning of this bullish trend here. We had great sell signals on your moving averages right at the end of the trend, the beginning of the bearish reversal here in the beginning of COVID, okay? You see that? We also had really good sell signals in your stochastics for that. But whenever you look at, now we did have buy signals early here in your Stokes at the end of the move, but that would not have aligned for the trend. Where we started to confirm the bullish trend, this is the post-COVID trend, by the time that trend started to confirm, we were already overbought on your stochastics, okay? And so I'm drawing your attention to this for a very specific reason. I have a ton of people that come to me and I start teaching them how to interpret market data and how to use your indicators. And as soon as they see overbought on an oscillator, whether it's your stochastics, your RSI, or something else, as soon as they see overbought, they think it's time to short the market. It's not. Just because it's overbought doesn't mean it's time to short. Just because it's oversold doesn't mean it's time to buy. It's the context in which we apply these tools. So bring that back now to where we are in the market. If I come back to current market conditions, you're going to notice that we're getting a lot of mixed signals with our moving averages. We get a short signal, then we get a buy signal like we had here in late March, and then we get short signals again. Then we get buy signals like we had in August. Then we get sell signals again, and we're just about to get another buy signal. It's up, it's down, it's up, it's down. It's whipsawing us back and forth, back and forth. It's a miserable experience whenever you're trying to trade a trending strategy with an indicator that's designed for a trend, and you're stuck in some sort of a channel. So that is a bad time to be using your moving averages. And I know we still use them because in a bearish trend or bearish channel like we've been dealing with, a descending channel, it's even more difficult because every one of the little bullish signals you see in the moving average, you're questioning, is the trend reversing or is this just a whipsaw? And it turns out that it's really the wrong tool for the time. So that's why I'm kind of just trying to draw your attention here to the stochastics and showing you what you can do with it and how it's going to time this up. And I think it's going to give us much better indication for what's actually happening right now. So I'm going to put our lines back on here. When this thing turns around, whether it happens right now at the blue trend line that we've got on here, whether it happens at the yellow line around 32,400, or whether it happens up here around 33,000, somewhere up in here, we should start to see this thing roll over. You'll see your stochastics roll over, and when that happens, that will be your next continuation signal to the downside. Okay, so that's what's going on with the Dow Jones. The S&P looks very similar. And you'll notice, of course, it has not rallied as far. I mentioned this Sunday night as well. We are at a pivot already at 3,900 range. We closed the day at 38.59 is what we closed the day at. So we're very close to this kind of purplish pivot area that I've marked on here. We are not quite back to overbought. So if we're looking for a complete cycle there, you will have to see a little bit more bullishness happening. But just kind of going back in time here, you can see that these signals for the stochastics worked really well during this same phase of the trend for your S&P. And so I think it's going to be a better tool for you to kind of get your eyes on right now until we get the full resumption of the trend. Okay, so that's what's going on with the S&P, and really it's the same thing with the NASDAQ. Again, the NASDAQ still continues to be the most bearish, and to that point, as we look at what's happening tomorrow, we'll look at this in just a minute, but futures are already heading down substantially for the NASDAQ. Google had some misses on their earnings today, so that's kind of impacting that. But just kind of taking a look here at the same motion here on the NASDAQ. You see very similar signals and getting very good sell signals, very, very good sell signals throughout here. And I think we're going to get another one of those coming up here in the near future as well. So long, intermediate term here, I'm still very bearish on the market. Short term, I think we may still see a few more days up. We'll have to see. Let's move over to these futures, because as I'm doing this video right now, your Dow futures are only down about 80 points. Not very much. Hopefully you can see that there. That's what's happening to your Dow futures. But look at your NASDAQ futures. We're down 200 points. I don't know if you can even see that here. It gapped down. We closed yesterday up here, and it gapped way down here in after hours, and we're opening down quite a bit. So if that holds the rest of the evening and we end up opening there, that will be the signal most likely. If the NASDAQ index looks like the futures do right now, it will open up with a gap down and probably keep trading down a little bit. And if you see that, that is one of my favorite all-time bearish candlestick formations called a one black crow. One black crow. One of the best bearish candlestick signals that you're ever going to see. It's fantastic. So we'll see if that plays out. Maybe Wednesday, tomorrow, today, whichever day you're looking at this. Maybe that is the day that we resume the bearish trend. We'll have to find out. All right, let's look at Bitcoin. Bitcoin had a pretty big break, relatively speaking. I've got to resize this here, but had a pretty good size break to the upside. There we go. Took me a minute to do that. Now you'll notice that it's not it's not a huge break. I didn't get anywhere close to this trigger we put in here at 24,000. It's a similar move to what we had back in early October, and we're going to see if we can break out of that resistance right around 20,004, 20,500, right up in there. And if we can get some closes above that, I'll feel a little bit more optimistic on Bitcoin. But of course, that happened in September as well. It seems to continue to be putting in this support. I just have no reason at this point to think that Bitcoin's going to keep selling any more than this, but it may stay stuck for a while. The crypto market, the people that are trading it are very different in terms of trading psychology than typical stock traders. So, we're still trying to kind of figure out where some of this trading behavior goes, but this seems to be the pattern. The pattern for crypto seems to be after a big bear market, it can take a long time to establish that support, and it just keeps pounding into it, and then eventually it breaks out and it runs. So I think that's going to happen soon for Bitcoin. Ethereum, let's take a look over here at Ether. Ethereum seems to be moving pretty good as of Tuesday and into early morning Wednesday. We'll see where we end up for the day. I still have that entry in here at 1589, and it looks like we may be on track to trigger that. Talk about moving averages and talk about signals you get with your stochastics. This is a great example. If this continues to move and we hit our trigger at 1589, this would be a bullish trade. It confirms based on the moving averages because we're above the averages. Averages are starting to cross the upside. That's a confirmation of a bullish trade. You look at your stochastics and it tells you you're overbought. So you see, that's exactly what I was talking about with the index, with the Dow index. When you're beginning a new trend, your stochastics is not a very good tool, but your moving average is a great tool for the beginning of the trend. When you're in a channel, a sideways move, your stochastics is a great tool and your moving average is not very good. So you got to use the right tool at the right time. All right, so there's my update for Ethereum. Keep your eyes on that. It could be today, it could be tomorrow, it could be before the end of the week, and it may not be at all this week that we'll have the breakout. But I think that is very, very close, so we're going to keep an eye on that one. XRP, it started to move a couple weeks ago. It has pulled back into what I call a flag pattern. This is actually a continuation signal. Let's see if I can get this right here. Excuse me, I had to sneeze. You probably saw that because I think my camera's still on here, but I tried to mute it. Hopefully you didn't hear that because there's no way I'm editing that out. So, all right, this is a continuation signal called a flag pattern, and I want to show you a couple cool things about this that tells us it might be time to buy XRP. Take a look at your stochastics. It is crossing up after the completion of the flag, building a support right here at your 50-period moving average. If this breaks to the upside, Stokes is already heading up. This is one of my favorite continuation signals with confirmation. This is looking very, very promising. XRP may be ready to roll. This is fantastic. All right. Let me give you a couple more highlights here on XRP. We've got the bottom that came in September here. There was your bottom. Come on, pen. Work for me. There we go. Here is your first higher high. This will be your first higher low. When it breaks out, we've got a full confirmation, a new higher high. Okay, so I'm very, very, very optimistic about the future here of XRP. Let's see if it will go. Come on, let's get some movement here. XLM has not had any breakout yet. It's still hanging out here, but your Stokes do look pretty promising on it. So let's see if we get any movement in terms of that there. All that to say, crypto is moving. It's just not getting there as quickly as we want it to, but I think the future for it's going to be good. All right, the only other thing I have to add is Apple is going to be doing earnings. Here's the chart for Apple. We've had bearish trades set up on this. We hit all of our targets for that in the last couple of weeks. We've closed some of those trades. We've rolled some options. We're in a counter move to that, but earnings is coming up right here on Thursday, the 27th. Be aware of that. That could change a lot for Apple. So keep an eye on that and see what happens. I just wanted to draw that one to your awareness. All right, I think that's probably all I need to discuss with you for this market update. Thank you for joining me for it. I want to remind you, Market Maestro Accelerator Early Bird expires tonight at midnight. Bear Market Survivor 3-day challenge, day 3 of that is today. at noon Eastern Time, 11 Central Time. If you're watching this after that time, then we've already done it, so just watch the recordings. There's 3 days of it. All 3 of the recordings are on the YouTube channel. They're also on our website, and you really need to take advantage of that and watch that. Some really solid training on what to do in bear markets. All right, so brought that to your attention, and if you've not subscribed, by all means, come on, it's time to subscribe. I mean, where else can you have somebody giving you market updates and sneezing in the middle of it and hopefully muting the microphone? I don't know if it muted or not, but where else can you have that kind of fantastic market updates? I mean, when was the last time Jim Cramer sneezed on CNBC? I don't know. But you get it right here. So get yourself subscribed to the YouTube channel. And if you've not subscribed over at TradeMaestro.com to our mailing list, get yourself subscribed over there. Thank you for watching, folks. I hope this has been helpful for you. Give me some feedback down below. Give me some comments. And I'll look forward to the next one. Until then, happy trading to all of you. And we will talk to you soon.